Hello, everyone. This is Chief Trading Strategist Blane Markham here at the Optioneering team, coming to you with my weekly market update video here as we head into the Friday trading session tomorrow. And there's certainly a lot to break down. We're seeing another week here where, we're right in the middle of earnings season still. We're continuing to get big earnings results in. And overall, the earnings that we've seen thus far, the results from Q4 have not been all that bad. We've had mostly earnings beats, particularly from most of the bigger companies. But the real key is that the earnings reactions from the market, the reactions to those reports, and some of the guidance, things like that, has not been very favorable. Obviously, we've continued to see a lot of volatility. The market's still really taking a posture and a stance of being very risk off and turning more defensive. That's really the latest narrative in this whole undercurrent of rotation we've seen here in the market playing out for really several weeks now, even really several months. Still continue to see a ton of market rotation under the surface. And in particular, it's really starting to wear on the tech sector. Obviously, a lot of the selling this week, there's been a lot of prolonged weakness in anything that's been a prior momentum high flying stock or anything related to the crypto space because of some of the extreme weakness that's been displayed from Bitcoin and some of the other major cryptocurrencies. So anything tied to that space has been under a lot of pressure for quite some time. But now that weakness has really started to bleed over this week into different pockets of the tech sector in a big way. We've seen software. Software was already down significantly this week. We've continued to see it sell off very sharply this week. Even some stocks that have reported very strong results in the software space have continued to just get absolutely crushed this week. That weakness also spread to other pockets of the tech sector too, namely some of the semiconductor stocks and some of the AI hardware names. So you're seeing some weakness in some of the new pockets of technology that have really, been quite strong still up really until the last week and a half. Some of these semiconductor names, they really have continued to be strong market leaders up until this week. You're starting to see some of those trends crack. Some of those stocks had gone really parabolic and vertical. So you're seeing some of that unwind here. Unfortunately, the market still has been able to get away at the index level thus far. Fairly unscathed. You're only still just about 2.5% or so off of the all-time highs that we set just a couple weeks ago. We're still able to get away with some of the market rotations, kind of the flight to quality and the flight to defense here in the market so far. So you're seeing things like staples, materials, energy, things like that start to rally in place where some of that money is rotating out of tech and rotating to those areas. So far, we've been able to see the indexes hold up rather well. We're starting to see some signs that we could be looking at potentially a bigger pullback here. But with that, let's go ahead and break down the charts and the technicals here because I think that will begin to really make clear what I'm talking about. So hopping right in. So we can see here this red line is our 50-day moving average. This is a chart of the S&P 500 here. And you can see on several different occasions over the past 2 months, we've gone down and tested this 50-day moving average. Now, you can see we did that here in mid-December. You can see we did it also in mid-January as well. So on both occasions, we traded down, closed below the 50-day for 1 day, and it was a very quick test of the 50-day moving average. Very quickly, shortly thereafter, the index rallied, trading higher and actually trading up to new all-time highs after both occasions. Now you can see this week we have gone down and retested the 50-day moving average once again for the third time here in really just about 2 months. So we've traded down, just barely closed above it during the Wednesday session. Now in Thursday session, of course, the significant selling pressure on the markets really became too much and really pushed the index well below that 50-day moving average, actually closing below 6,800 again. So the last time that we closed below 6,800 was that time when we had this bit of a sell-off back here in mid-January. So this, of course, marks the third time in just over 2 months that the index has closed below the 50-day moving average. So certainly beginning to show some signs that, there's some upside exhaustion, that momentum has really slowed to the upside, and that we could be looking at a, bit deeper of a pullback here. One other thing I want to point out too is that really ever since this pullback we had here in late November, heading into the end of November right here, you can see the market pulled back all the way down to about 65.50. And ever since then, we really been in a pattern of just barely grinding out just by a few points here or there, new all-time highs on the S&P 500 as all this rotation has been going on. But one really encouraging thing is that we've been making a nice series of higher lows coupled with that. So you can see we had a low here. We had our next higher low right here. We had our next higher low. So we're just kind of stair-stepping these higher lows, mixed in between these, just barely grinding out these new all-time highs. Well, you can see the kind of trend line here that was forming here with these higher lows. With today's trading action and Thursday, we've broken through that. So there's no more higher low. We closed essentially exactly at the same level that we closed at right here, dating back to the January sell-off. And so this is a light level of support right here. I wouldn't say that this is a strong floor of support below the market at this current price level, just below 6,800. So, we've closed here. I do expect, given today's price action, that we'll probably trade down a little bit tomorrow just to end the week down. And just the way that the Thursday session wrapped up, I would be pretty surprised to see the markets actually bounce on Friday. So I fully expect that we're probably going to be on pace to close below the 50-day moving average once again, heading into tomorrow. So, overall, some things are starting to, show some further signs of volatility here in the index, some signs that may warrant some caution about, where we might be going in the next couple weeks here. And potentially a pullback of 5% or so, or possibly just a touch larger than that, could be on the table here. So we're definitely keeping a very close eye on the index and the price action here in the couple days to come, because the market's really at a key pivot point right now, given that it's traded down to this prior low right here back to mid-January, and then we have a couple lows here and here, so dating back to mid-December and mid-November there, that will prove as additional levels of support. But one thing that we are keeping an eye on for potentially the longer term here, maybe over the next several weeks from now, is that this pink line down here is our rising 200-day moving average. So of course, the index is still above the 200-day moving average, a widely tracked technical indicator that helps confirm that the index still is in a longer term uptrend. But as you can see, this 200-day moving average is starting to really notably inflect higher here at the same time that the index here is starting to really lose steam and potentially look like it's going to be trading to the downside, and actually have a bit of corrective trading coming up here. Now, with the two of these starting to converge towards each other in the same direction, we could be setting up here in the weeks to come for a test of the 200-day moving average, something that we have actually not done since May of last year. So it's been quite some time since the S&P index has actually even traded near the 200-day moving average. So something to keep an eye on here in the weeks to come. Final comment about the S&P right here, though, is that if you look down here at the 5-day RSI chart on the bottom, you can see that we have gotten down to oversold territories. The RSI has dropped below 30 here. So in the short term here, we are a bit oversold and due for an oversold bounce. Doesn't mean we're going to, bounce and trade right back to all-time highs, but we have seen that actually happen on the recent occasions. So I think we're probably still looking at a bit of a further correction from here, but you can see each of the last couple times that the index has gotten down to these oversold levels, we have experienced a pretty quick bounce. So again, something to keep an eye on there as well. I know, a bit of a mixed picture right here, but really the index really is kind of sitting at a crossroads right now. So these next couple trading sessions are going to be very, very important. Now, our next chart here is actually a chart of the NASDAQ 100. So, of course, this is a more tech-heavy index here, being the NASDAQ 100. So I just wanted to highlight this just to show you, again, just some of the brunt of that selling that's really been taken by the tech sector here this week. Of course, you can see the trend has broken down a little bit further here in the NASDAQ. Very similar setup. A lot of the same points I was making about the S&P also apply here, only that the NASDAQ 100 is broken down a little bit further. It's experienced a lot more selling pressure and price action to the downside, and it's getting actually within striking distance now of that rising 200-day moving average. And I think very likely, probably in the next week or two, we're going to be setting up to have a test with the 200-day moving average for the NASDAQ 100. And it'll be very important to see the NASDAQ remain trading above that 200-day moving average. Now, as has been clear in this week's trading, the vast majority of the selling pressure in this market has been concentrated in tech and the prior high-flying momentum stocks, anything crypto-related. And the market has really taken on a much more defensive posture, seeing a lot of rotation into those more defensive names and sectors. And so, despite the kind of bearish setup that we're starting to see unfold in some of the charts and some of the really extreme selling that we're seeing in different pockets of the markets, that doesn't mean the entire market looks quite so bearish. There are certainly some pockets that are starting to participate to the upside that are looking quite well. There's some sectors that are looking the best that they have looked in a number of years. Again, think staples, think materials, think energy, even some of the pharmaceutical parts of healthcare. So there's definitely a lot of pockets of the markets out there. We're still seeing a strong bull market, still seeing some really strong bullish price action. And we've been spotting these opportunities still for our members. And in fact, we've been putting out some trade alerts to our premium trade alert service members. And here is one example of that right here. So despite all of the negativity and negative headlines, strong selling pressure we're seeing involved in tech, you can see this chart right here has been largely unfazed, and it's only actually been somewhat of a benefit to this chart here for Merck. This is ticker MRK, and this is a really strong trend that we noticed several weeks ago. And we actually sent out a trade alert to our members for Merck. It was a call option purchase position. We really like to see the momentum that was building here. It was a very powerful trend that was relatively new, that was still unfolding, putting together some really, really nice price action. So there were several occasions here where Merck had traded into overbought territory. We were waiting for it to pull back into the Keltner channels there, offering a little bit better entry price. And then at that point, it's actually when we sent out the trade alert to our members. So it was actually right in this area right here, right as MRK was pulling back out of overbought territory, that we sent out the recent trade alert for MRK to our members. And you can see MRK continued to trade down towards the middle Keltner channel for a couple trading sessions. But then in this week's trading, you can see MRK shares absolutely caught on fire and have been on a rip-roaring rally higher. And this has really turbocharged the trade alert that we sent out to our members. In fact, at the close of Thursday's trading session, the trade idea that we sent out to our members was, again, performing quite well and was sitting on a profit opportunity of just over 215%. And again, this trade alert was sent out to our members just about 2 weeks ago. So this trade alert has been performing very, very well. We fully expected that MRK was going to benefit from some of this defensive posturing and rotation we've seen here in the markets. And that's exactly how this trade has played out. And we've been really glad that our members have been able to benefit from this trade idea that we sent out to them here recently. Now, I certainly hope all of you watching this market update at home were able to follow along with this trade idea and participate in this upside on the trade while the market in the backdrop has been fairly choppy and volatile. But if you have not, if you still are not signed up for our premium trade alerts, don't worry. I'm going to go ahead and share with you right now how you can make sure that you begin receiving these trade alerts just like this one as soon as we send out our next top trade idea. So if you want to make sure that you are set up and on the list to begin receiving our top trade ideas and trade alerts that we send out to our members, go ahead and give our team a call. Dial them up at 310-647-5664. Go ahead, give them a call. They'll be able to answer any questions you have about our trade alert services, our strategies, our programs. They'll be happy to help you out. And most importantly, get you signed up so that you begin receiving these trade alerts just like the one I shared with you there for MRK. Now, there certainly has been a lot of volatility in markets this week, but the one positive thing about volatility when it comes to the markets is that it also creates opportunity. And our team is certainly spotting a lot of brand new opportunities out there. And we have a lot of new trade ideas that we're really excited to begin pushing out to our members here. So if you want to make sure that you receive these new trade ideas as soon as we send them out to our members, again, make sure to go ahead and give the team a call. Now, looking out over this upcoming week, there's not a ton of catalysts that are going to be massively market moving. Now, we do have a jobs report upcoming this next week. Yeah, I think that could be a significant event, but I'm not sure if that's going to truly be the catalyst that we need to really reverse this current correction that I think we're beginning and really reverse the price action higher. So, we have a jobs report coming up. We have an inflation report next week. Of course, we are continuing to get some new earnings reports out next week as well. Now, those earnings reports are not going to be quite as significant as some of the ones we got this week. So again, I'm really not sure if there's a major catalyst regarding earnings or economic reports next week that are really going to reverse this current correction. I think we need to see some other things and sentiment kind of have a shift here in the market before we see the bottom of this current sell-off. We're going to be watching the market very, very closely here in the coming trading days. As I mentioned earlier, the price action over the next several trading sessions is going to be very, very important to determine, how deep of a correction we may be looking at here and where we're going to be spotting opportunity next. Now, I hope you enjoyed watching this week's market update. I really enjoyed putting this together for you, getting my thoughts out there, telling you what our team is watching really closely and what's influencing our trading decisions and what we're seeing out there. So I'll be looking forward to put together the market update for you next week. There'll be a lot of trading action, a lot of things that are going to be happening between now and then. So I'll be looking forward to putting this together for you next week. But until then, hope you all have a fantastic weekend. Thank you so much for tuning in, and I'll see you back here next week. Take care, everyone.